Welcome to the Agent of Wealth podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth. This is your host, Marc Bautis. Today we're exploring a fast-evolving corner of the financial world, one where artificial intelligence, private markets, and individual investors collide. Joining me is Mike Ivancie, Chief Marketing Officer at UpMarket, a platform that gives accredited investors access to exclusive alternative investments, including stakes in AI giants like OpenAI and Anthropic. Mike has an extensive background not only in scaling fintech firms, but also in law, impact investing, and startup growth. Before UpMarket, he helped lead C-Note, an investment platform for underserved communities, and he's on a mission to open up previously gated opportunities to more people. In this episode, we'll break down the trends driving AI and private market investing, how everyday investors can participate, and what it means for building diversified, forward-thinking portfolios. Mike, welcome to the show.
Hi, Marc. Thanks for having me. Pleasure to meet you.
Yeah, same here. You've had a diverse career across law, fintech, startups. What drew you into the world of alternative investing and AI?
Well, yeah, so I've kind of had a lifelong passion for investing. It started with my late grandfather. He used to send me IBD clips and things when I was in middle school, and I've kind of had a passion for investing throughout my life. And, I realized that was missing. Also, marketing sort of creative outlet and sort of marketing fintech firms has been a confluence of those things where I really get paid to talk with you and learn about AI and what's happening in technology and investment opportunities, and it's really fun to be able to do something you like as your day job. So that's kind of the cliff notes on how I got to where I am today.
I also got started with IBD. Like that was one of the things that it was kind of, and now no one knows of IBD, like who's into investing. But I thought that was like the concept was great and how they kind of broke down investing into like a systematized approach. I get a hint of nostalgia, and I think of my grandfather every time I see those OHLC charts, the purple and blue lines. It's a silly way, but it makes me think of him every time I see him. Yeah. So the concept of investing in private companies, and I think it's really even more appealing now than it probably was, because you're seeing companies stay private longer than what they used to. Maybe give us a little background on UpMarket, how it works, and how does it open up investing into private markets, whereas years ago it wasn't so easy, it wasn't so accessible to invest in private markets.
Yeah, absolutely, Marc. So I think you're right on that. What we're seeing in the broader markets is that companies are going private later, or going public later. They're staying private for a longer period of time. Like I think Amazon, when it IPO'd, probably IPO'd at $200 million, and all of that. It's a multi-trillion-dollar company, depending on the day its market cap is. But a lot of that value accrued to public shareholders, and now we're kind of seeing the opposite, where these companies stay private, and you have OpenAI, over $300 billion valuation, Anthropic, $60 billion valuation, and that value is really accruing to private investors. And so UpMarket was created with this ethos, which I'm very aligned with, that we should increase access to people so they have choice. That doesn't mean those choices are right for everyone, doesn't mean the private markets are right for everyone, but the idea is to give people the opportunity to invest. And UpMarket is one of many alternative investment platforms where you can go create an account and you can get access to deal flow. And that means what we do is we go out and source opportunities. The technical term is the venture secondaries or secondaries market. And so what happens is fund managers maybe that invested in a company like SpaceX or OpenAI years ago, they want to sell some of those shares to get liquidity for their LPs. They sell those on a private market. And what UpMarket does is we go out and we source these deals and we find ones that we think have compelling pricing and economics, and then we sell them to investors. And typically to trade in the private markets, you're talking transactions, $5-10 million check sizes. And so what we do is we go source these opportunities, diligence them, and then we break up, say, that $5 million chunk into 100 pieces or 10 pieces or whatever it might be, and then sell those individual chunks, which are more accessible, 50,000 minimum or 25,000 minimum, to qualified investors. So typically you have to be an accredited investor to access UpMarket and other platforms. We're a US regulated broker-dealer. And so what we do is we just make it easier to access these private market opportunities that have been around for quite a while, but now the venture secondary market is really developing and the liquidity is increasing and there's a lot of players and growing competition, which I think is actually a really positive thing for investors because it generally means lower fees and maybe lower minimums to access these kind of products.
I wanted to touch a little bit on the process of buying off, like you mentioned, that secondary venture capital market, right? Because if someone wants to buy Apple shares, they know they can go to their brokerage account and they can see what the price of Apple is right now, right this second, what it's last traded at, what it's paying for. Can you talk a little bit about how it's different in the private market? How is a company valued in the private market? How are you that $5 million tranche that you're buying? How is that valued? And then how does that get broken down to the individual investor?
Yeah, great question, Mark. So, there's not a mark to market on a daily basis for these private companies. So private markets are exactly that. You have, a fund that they have an offer out. We're going to sell X amount of shares at X valuation. And then you have purchasers in the market that will call out, I have a bid at this price for this amount of shares. And then there's larger broker dealers that transact more institutional level. And if those bid and ask sort of meet, a transaction happens. How do you know the value? Well, certainly those private market transactions that occur, if you have insight into those, the actual transaction price gives you a really good idea of what the market pricing is at that moment. Another way that you typically see private companies valued, of course, is when they have a fundraising round. So OpenAI recently raised a round, I think. And so whatever that was at, I think it was $350 billion at that moment in time when all those investors, those venture firms invested in OpenAI. That gives you a really good idea of valuation. And then another thing we're seeing more recently that's becoming quite popular is something called a tender offer. The way you can think about a tender offer is you have, say, a SpaceX employee that's been at SpaceX for a decade. Perhaps on paper, the shares they have, they're worth $10 million or $20 million, but the company isn't going to IPO, so they can't readily sell those shares. So what a company like SpaceX will do is say, we're going to have a tender offer. That means we're going to allow employees to sell shares at a set valuation to get liquidity. And then investors come in and buy those shares. And so SpaceX did a tender offer, I think, in December of 24. Employees were able to sell those shares, and then that sent a new benchmark for what the company was valued at that time. So typically you're looking at primary fundraising rounds, which I talked about, tender offers, which I just talked about, and then actual secondary market transactions. And so when we're going out and sourcing deals, we're looking at all those data points and then trying to get a good idea of what the current market value might be. And so, the longer you go from a tender round happening or a primary financing round, the kind of more error bands you see on pricing, it could be higher or lower. And then you sort of have to look at the dynamics in that sector, that company, idiosyncratic factors related to that company, and then you can kind of come up with what you think is a fair valuation at that given time.
And then is that, so that's UpMarket purchasing these shares, and then does UpMarket break up that large amount that they purchased at a specific price? Do they say, okay, now our offer is at this price, whatever you come up, and then it's up to the individual investors to say, okay, yes, I think this is a price that's worth it or not worth it?
Yeah, absolutely. So we go out, we source an opportunity, and then we offer it to our investors. Obviously, there's never an obligation to invest. Like, no one has to invest in anything we offer. We always try and put forward opportunities that we think are great terms. And so typically the way these venture secondary deals work for platforms like UpMarket is there's a SPV and access fund that the manager creates, and then they invest into the individual investors invest in that access fund, and then it's a layered approach into the underlying holdings of whatever venture fund or partner that we've sourced those shares from, and we've done diligence, reviewed financials or audited financials to make sure that they're actually holding the shares that they say they're holding, and our investors are accessing the company that we say they're accessing. And one thing I want to add is I think there's a lot of mystique and confusion around private markets, and I've actually created a pre-IPO investment checklist. You can search for it on Google or visit our website. You don't even have to put your email in. You can just download it and review it. And what I've tried to do, I'm really big on financial education and empowering people. And so you can look at this guide and it'll give you a really good idea if you're going through making your first pre-IPO investment, like what are the things I should be thinking about? What are the typical fee ranges? What are the risks and concerns? How should I underwrite this investment? What are the growth factors, exit multiples I should be thinking about? And I think that would be a good resource I really want to share with folks if they're interested in this, but they have some trepidation or confusion about how the process works.
Thanks. Yeah, we'll also link to that in the show notes. One of the things that is probably different than what people are accustomed to in the public markets is liquidity. Can you talk a little bit about what the liquidity is like if someone does purchase one of these private market investments?
Yeah, liquidity is a huge trade-off of the private market. So, you talked earlier, you gave the example of buying Apple shares. And so at any time, if, it's regular market hours, you can log into your brokerage account and you can sell those Apple shares. It may not be at a price that you like, but you can just hit the bid on, or the ask and sell those shares and be done with them. It's much more challenging in private markets. And generally, I think the expectation for most investors going into one of these private market investments is that it's a long-term investment, a long time horizon. Meaning you buy, say, SpaceX or OpenAI or something, the expectation probably isn't, it should be, I may not be able to exit this investment until the company is acquired or goes IPO. Now, certainly there's the ability to get liquidity, and UpMarket and other platforms always try and serve their investors and provide them liquidity. Something unforeseen happens, they need to raise capital. The challenge with that is you sort of are beholden to the market. And because it's this private market, say there's been some negative news about the issue that you're holding, maybe the price is down a little bit, or if we're going through a period like 22 and 23 where people were really down on investing in general, the price you want may not be the price that you get, and you'll have to come down on price to meet the bids that are in the marketplace. And so it's much different, I want to impress on people, much different than public market trading where you can exit positions just by clicking a few buttons in your brokerage account. If you want to sell a private market issue, you have to go out and find a willing buyer at the price you're asking for, or make concessions on price to be where the market is at.
Is there any visibility into what's going on in the private market company if I'm an investor in it? Whereas a public company, you can see access to financials, different data. Or is a private market investment essentially just a black box where kind of you don't know what's going on?
Yeah, in some respects, there is a black box element to it because these private companies don't readily share their financials. They don't have the public reporting requirements that a public company does. We've tried to alleviate that at UpMarket in two key ways. One, we've partnered with a third-party research firm, and they provide actionable research on I think the 100 or 200 most popular private companies, and they have revenue data for a lot of these companies as well. So you can look at the back, the historical revenue, and then sort of construct a multiple like, okay, 2024 sales were 10 billion. I'm paying 50 billion for this company. and paying a 5x multiple on historical earnings. So that's one. And then two, we've actually partnered with a data provider just recently. All UpMarket investors have access to this if you have an account, where you can search and see close to real-time pricing. So this pricing calculation looks at all the factors I was talking about before: tender offers, primary rounds, and then indicated bid and ask and actual trades. And it compiles a sort of estimated price of where the issue is trading at that moment. Obviously not as high fidelity as public markets, where you have large liquid bids and asks and prices, very liquid and clear, but it's a much better signal than what it has been historically, which is sort of lick your finger, put it in the air, and try and guess where you think the market is trading. But yeah, you're absolutely correct to highlight that the transparency is not nearly as high in private markets because the reporting obligations aren't there, and these companies are typically tight-lipped about their financials and growth. So typically what you'll see is a media will pick up a story like Anthropic is a really good example. They're a competitor to OpenAI. Just recently, Reuters reported that they had grown their ARR, their annual recurring revenue, had reached a $3 billion run rate. So you'll get trickles like that in news, and those are kind of the key signposts to help give you an idea of how the company is doing and whether the current valuation is fair, overpriced, or undervalued.
When UpMarket is doing its due diligence on these private market investments and whether to accept them on the platform or whether to invest in them and make them available on the platform or not, are there certain criteria that you're looking for to say, yes, this one fits what we're looking for, whether it's size, revenues, what are you guys looking for to determine whether you should invest in something or not?
Fundamentally, the most important thing is who are we getting access through, and are they trustworthy and credible? I think there's a risk out there that some people can take advantage of the opacity of private markets and maybe offer things that are extremely high in fees, or maybe selling access to something and they actually don't hold the underlying asset. And so our partner is probably the first and primary concern. Are they, can they provide audited financials? Can they show stock certificates? Are they a trusted, typically RA with X, 100 millions of AUM or $1 billion of AUM? That's a huge trust indicator. And so that sort of diligence on, do they actually hold what they purport to? That's the most important piece in my mind. And we're always doing that. And then the second piece is this an attractive opportunity from a market pricing perspective? And our investment team sort of looks at all the things I've talked about before: recent primary rounds, tender offers, bid and ask, and closed transactions in the private markets to get an idea, is this fairly valued? Because, valuation is so critical at entry. And if you're paying, up private markets, you're going to pay fees on top of that. So that adds to your entry price. But if you're overpaying at entry, it just makes it really challenging to generate competitive returns over time. So we're always trying to source well-priced opportunities, with the minimum amount of fees that we can source for our clients. But I think the biggest thing is making sure that you're investing in what you actually believe you're investing in. And that's something we do extensively at UpMarket.
Hey, we talked a little bit about AI and OpenAI and Anthropic, and it's no secret how hot the AI sector is in terms of investment. Are there any other areas of private markets that maybe are flying a little bit under the radar, but you're finding compelling investment opportunities in?
Yeah, so I just did a webinar with our research partner, I think 2 weeks ago or last week, about automation and defense technology. And so I think a lot of investors are thematic investors. So they see things happening in the world and then they form an investment thesis around that. So what are we seeing right now? We're seeing huge demographic decline. A lot of countries, I think Korea and US isn't far behind, Japan. We're not having enough children. There's, we're below replacement rate. And so if we want to keep our economies humming, automation is probably something we need to invest in. And it's a big theme that also has a confluence with artificial intelligence, because if you can build humanoid robotics or other robots and then power them with AI, these are smart machines that can sort of assist with tasks of daily living, but also manufacturing and other advanced value-add industries. And so I think private markets are really interesting because you can get into these themes relatively early. Obviously, you have to go through the trade-offs of investing in private markets and sort of the friction of doing it. But I think automation, so companies like Figure are leading there. There's public, obviously, Tesla is doing a lot in robotics. And then the defense theme is really big. So what's the macro theme there? We're kind of deglobalizing. I sort of think, unfortunately, we're deglobalizing, kind of becoming a multipolar world. We see this conflict in Ukraine. Defense tech companies, and especially drone companies and anti-drone companies. So Anduril, Shield AI, related companies there. There's a lot of companies innovating in those spaces. And there's a lot of opportunity there. And I just find it so fascinating to learn about these companies and explore companies really on the cutting edge of these themes. And they're likely to continue growing based on kind of what we're seeing happening in the world real time.
Does UpMarket, when they're looking at adding investments to the platform, do you look first for a thesis like that and try and find companies that fit the thesis, or are you looking? Is there some kind of mass inventory of companies that have shares available, and you kind of have to fit a thesis or something into the framework of one of those companies?
It varies. Sometimes we have investors reach out to us, and we're always trying to be responsive to investors. So, a few years ago, OpenAI, there was a lot of interest there, and we worked diligently to source shares in that company. And more recently, people have been really interested in Anduril. Partly that's because 60 Minutes just did an extensive profile on the company a few weeks ago, but also I think we see, you see these images out of Ukraine and other places where drones are essentially the soldier on the battlefield in a lot of respects. And so investors will come to us and say, hey, I'm really interested in this company. Can you try and source it for us? And we'll go out. And if we can find something where, it meets our criteria, the pricing is reasonable, we'll offer that to investors if it passes our diligence. Sometimes we do sort of try and think ahead on themes. So when AI was in its early stages, we onboarded, we don't just sell pre-IPO companies, we also sell hedge funds and private equity and real estate funds. And one of the big themes related to AI is energy. The amount of energy we need to power inference and training and these massive data centers is just enormous. And we found some hedge funds that trade energy futures, natural gas futures, and we saw those as sort of a complementary trade to AI, a sort of second order trade related to AI. And so we'll source opportunities like that if we think the market presents, sort of compelling thesis for it. But generally our view is we don't want to cram decision making down to our clients. Ultimately, it's on the clients to decide what they think is best as far as opportunities. We're just trying to go out and sort of listen to our clients, listen to the market, find opportunities and present them, and then let individual investors decide, yeah, actually this is really compelling, or no, I think this thesis is long in the tooth, or this is a little overvalued, I'm going to pass on this.
What do you see as some of the trends going forward from either UpMarket or just in general in private market investing?
It seems to be that the secondary market is going to continue to grow, and it's maturing and the volumes are increasing. This sort of to your early point, Mark, the private markets are getting larger because these companies are staying private longer. You're even seeing some funds, that are publicly traded vehicles that have private market holdings. I think we're going to see more of that as well, because there's massive investor demand to get access to these companies. My caution with some of those publicly traded vehicles is that oftentimes they'll have a net asset value, and then they may trade, 50% or even multiples, 100, 200% above the true NAV. And there's definitely a buyer beware there. You really have to look at the underlying holdings and calculate on your own, what do I think these companies are worth? And am I drastically overpaying, even on a great upside scenario, what this fund will be worth longer term? But I think there's going to continue to be more competition. There's a lot of platforms like UpMarket. We're by no means the only one. And I think the competition is going to be good for individual investors because it'll lower prices and fees over the long term.
Why do you think that the big, like Wall Street companies, and maybe behind the scenes, they're offering or have access to private market investments, but why do you think they haven't released a platform to the masses to make it accessible?
Yeah, I mean, it's certainly possible that some of them are working on something like that now. I think historically the sort of view was that if you're ultra high net worth investor, perhaps you have your own network of VCs and partners, GPs you work with to access these deals. But, if you're high up at a wealth management firm, high net worth, ultra high net worth investor, you're going to get access to this deal flow. But it's sort of a perk of being a private wealth client. And that is something I think they kind of held in that space because it's an elite perk. It's like a special thing, and you don't want to necessarily give access to everyone. I also think, there's a reality of private markets, which is they're much less liquid. You're going to pay more fees. You got to execute documents. You got to review offering materials. You really have to understand what you're investing in. And that's not necessarily for everyone, and I think there's some risk if you're JP Morgan or, Goldman or wherever to offer these really broadly. And then, of course, depending on the specific offering structure, there, of course, are requirements that you have to be an accredited investor or qualified purchaser, which just by its nature, to honor our regulatory duties, you can't offer these investments to individual investors that don't meet that criteria.
Going back to AI, and you even talked about some of the automation and defense technology. Another area which I probably should have mentioned or at least talked about that gets a lot of traction now as well is cryptocurrency. How do you see private market cryptocurrency investments going forward? It seems like there's a high euphoria about investing in, and then it subsides, and then it comes back again. And I guess, do you have those types of investments on UpMarket? How are they structured?
We've done some crypto funds. I think typically we're not, focusing on a single sort of, coin or token or individual asset. What we'll typically do, sort of like our hedge fund work, is we'll find a manager that is going out and is top of class and can source these deals and find good crypto opportunities. And then that's part of a professionally managed fund. And so an example would be we worked with a crypto fund. They were early investors in an asset called WorldCoin, or I think it's just called World now, but that was led by Sam Altman's group. They invested in that coin, and then it did tremendously well, and the LPs that invested in that fund were rewarded pretty handsomely just for that investment. But the way we look at crypto is, it's sort of fraught with challenges, and it's a tough to navigate market, so we're not going to offer individual tokens or things like that. But if we find a manager that we believe in, passes our diligence, and has shown the ability to generate positive returns for their LPs historically and has the sufficient size, we'll onboard that manager. And so we have that crypto strategy I talked about, kind of this fund where they're going out and sourcing tokens and actually making venture investments in the crypto space as well, and kind of rolling that all up into one fund. We have another crypto fund that is sort of a quantitative firm. And so what they do is they apply sort of your traditional quantitative strategies to crypto markets. So, arbitrage between public exchanges and decentralized exchanges, arbitraging mispricings in those markets. Really interesting fund, really sharp folks doing that, where they're applying a lot of the traditional quantitative strategies that have existed for quite a while in traditional finance, and then taking them and applying them to decentralized finance, DeFi, and crypto markets more broadly.
All right, Mike, that's all the questions I have for you today. This was a really great conversation. Thank you for joining me. Before we close, where can listeners go to learn more about UpMarket and the work that you're doing?
Yeah, you can visit us at upmarket.co. I highly encourage anyone that's interested in learning a little bit about private markets and kind of what that investment process is like to search for pre-IPO investment checklists or visit our website and navigate to our blog. It's something I've put out for free for folks that you don't even have to give us your email. It's just available for download. My hope is, we can educate folks about this. It's not right for everyone, but if you're interested in learning more, that's a great place to start.
Great. We'll link to all that in the resources section of the show notes. Thanks again, Mike, and thank you to everyone who tuned in today. Don't forget to follow the Agent of Wealth on the platform you listen from and leave us a review of the show. We're currently accepting new clients, and if you'd like to schedule a one-on-one consultation with our advisors, please do so at bautisfinancial.com/call.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.